Hello, everyone. Heather Holmes here with KTVU Fox 2 News in the San Francisco Bay Area. And joining me today is Mark Rosenberg. He is CEO of Geoquant based in Los Angeles. Mark, thank you so much for being here.
Thanks for having me.
Talk a little bit about what your company does.
So we measure political and geopolitical risk, meaning we measure the risks of investing in different countries and in assets associated with different countries from a political or geopolitical risk perspective. So different like government instability or social instability, risks like policy risks around macroeconomic policies. We also measure things like health risks and other social risks that are relevant to things like the COVID-19 pandemic.
Okay, so you're looking at COVID-19 in regards to various governments. Where do things stand right now? Let's start with the United States.
So in terms of, and again, what we really monitor is the kind of political capacity to respond to something like a health shock. And then we track that over time and see how that, how the government's response will mitigate the risk of the actual health event. And in this case, our data showed quite early that the United States, relative to its development and relative to its size and relative to its economy, was pretty vulnerable to this pandemic from a political perspective, meaning their political capacity to respond to something like a health shock was particularly low under this administration. And I think that's largely borne out in terms of the, there's been some significant moves in terms of policy response from the Federal Reserve and from Congress in terms of monetary in the sense, but in terms of testing and the kind of health policy response has been lagging. And so that has borne out. In terms of looking forward, our indicators do show that U.S. health risk peaked a couple of weeks ago, and again, that's on the policy response perspective. But that it then reaccelerates in the second half of the year, and in the winter in particular of 2020. So that is driven by the concerns of our models around the reopening of certain municipalities and certain states at a time when a lot of the information we're getting from health officials says it's too soon.
Okay, so there was a lot that you just discussed there. I want to talk first about the factors that sort of drive this risk assessment.
Right. So it's a combination of structural, or what we call structural or kind of longer term country data that we get from established institutions. So when it comes to health risk, for instance, from the United Nations or from the World Health Organization, from government agencies like the NIH in this case, or the CDC in the United States. That's kind of what forms the underpinnings of our models for different countries. And then we take in higher frequency data like the news and to a lesser extent social media, but mostly the news, which gives us information about those same kinds of parameters. So how robust a country's health system is, or how much resources they're devoting to things like health response, how many hospital beds per beds they have per capita, et cetera. Then we get news on that front and update the indicators accordingly. So it's kind of like a higher frequency version of what you might get from the World Bank or the IMF or the United Nations.
Mm-hmm. And something else interesting that you mentioned there was this second sort of wave and another peak. How did you come to that conclusion?
Again, that's with a lot of our news flow, a lot of our data flows coming from the news and coming from credible, we curate for credible news because there's obviously a kind of fake news issue, and the overwhelming consensus in that data, right, is that there's likely to be a second wave of health risk in the United States come late summer, fall, and winter 2020. And because the government response is not, at least at the federal level, has not been commensurate with that risk, our indicators are going up at that time.
Mm-hmm. So what would you like to see done with this data? How is it used?
So we, as we're a business of, we sell the data mostly to asset managers and to kind of global investors, broadly speaking, but for the most part, asset managers, so investment banks, hedge funds, bulge bracket banks, and the like. We also service a large range of multinational corporations and then also public sector agencies, so mostly intelligence agencies. And so, as a CEO of a startup, we'd hope to see it used as it's been using now, just with more bigger and better, right? As we continue to grow. I think from a kind of putting my old hat on as a political scientist and as someone that worked in the human rights community and the NGO community, I think this data can be very valuable in terms of helping those communities, and we do work and partner with some of them in terms of trying to gauge where their policy response might be needed next. So, for instance, our model will show certain vulnerabilities in emerging markets or countries without the kind of health infrastructure that the United States has. And that's been kind of a really good application of the data, not from a business perspective, from just kind of a human perspective.
But from a business perspective, when you look at things, let's say in the coming months, what does the sort of data point to in terms of economic recovery?
Right. So we explicitly don't do economic projections, mostly because that's a pretty crowded field, and the political projections field is where we specialize. But I would say our data that correlates highly with economic indicators,
right,
suggests something a lot short of a robust recovery. So something in the kind of parlance of the day, more like a swoosh shape than a V-shaped recovery, where things certainly do pick up over time, but they pick up at a relatively slow pace, and they're vulnerable to reversals. Nothing in our data, and again, particularly because we have health risk resuming in the later part of the year, and our other social risk indicators, which are reading a lot of the news around unemployment and kind of economic distress, nothing is signaling that things are going to improve markedly anytime soon.
I wish you would have told me something differently, but I understand the data is what the data is. So we talked in regards to the United States. What about other countries and how they're faring with handling the risks?
So that's been really interesting in terms of our data will take into account countries' wealth and their health, the sophistication of their healthcare system, et cetera. And there, you do see a lot of the East Asian and actually Southeast Asian countries outperforming in terms of, our model would say, they would perform or respond about as well as, the European countries or the United States, but actually, because of their experience, I think, with pandemics and health policy, they've performed better. On the flip side, there are countries where we still see health risk that hasn't peaked yet, right? And those countries are Brazil, India, Indonesia. A country like Egypt, we screen as particularly vulnerable. So again, depending on our clients' interest in those countries, that shows that there's still, in terms of a first wave of COVID impact, we see that still to come in a lot of emerging markets.
I know that obviously you can't talk much about clients or anything like that, but just from someone who is looking at this data, talking with people in other parts of the world, describe the concern surrounding this pandemic.
Mostly well, I would say it's twofold. There is the kind of initial kind of deer in headlights. Is this a fundamental change to the way we're going to do business? And, what is the near-term path out of that in terms of, the priorities for this quarter or this year? And I think that's foremost in everyone's mind. And then, there's a second issue, which we do engage in because of the nature of our work, in terms of what does this mean for the future, in particular around supply chain. So where countries source their various inputs, particularly exposure to China, that's really kind of issue number one, is do we have to fundamentally change the way we do business from a multinational perspective? Some conversation already started around the kind of the trade war earlier last year, et cetera, and now has picked up. I think from the kind of asset manager perspective, they've been less exposed in that, the markets have recovered somewhat on the back of pretty unprecedented intervention by the Fed. And so I think the really what they're trying to gauge is where are there opportunities and where is there still risk lurking in the market.
Going back, though, to something that you mentioned, which is this fundamental change, is the consensus that there is going to be fundamental change in how we do things?
Yeah, I would say no, and just that, and I don't think that anyone, or again, at least among the kind of set that I've been interacting with, has enough information to really make that judgment. I think there's a lot of speculation to that effect. But then there's, history has a lot of counter evidence. I'm sure folks in, the 1918 Spanish flu pandemic thought life would change forever. And then we had the roaring 20s shortly thereafter. So I think, history is worth being modest, or kind of counsels us to be modest in terms of these kinds of projections. But certainly in the near term, for the rest of the year and next year, this is going to be a factor in everyone's commercial life.
I'm just curious, as you were sort of moving along, we're heading into this pandemic, obviously unaware that it was going to be quite as bad. Talk a little bit about how the metrics were changing as we were getting closer to this outbreak and it becoming a pandemic.
So one thing that was really interesting in our data, which we didn't really connect the dot at the time, but in retrospect, is that China's health risk was increasing significantly through late 2019. And to be clear, that wasn't because we had any kind of specialized data on COVID in particular, but there was just a raft of developments around different Chinese health risks and environmental risks. There was another swine flu outbreak. There was some protests around the government's response to it, et cetera, that was kind of driving up this indicator, and such that when the news around COVID hit, certainly China's health risk spiked, but it was part of a longer trend. And secondly, a second kind of factor that was interesting was that we started tracking kind of interactions between countries, and noticed that as China's health risk started increasing, other countries' health risks started increasing, kind of proportional to their economic and diplomatic relations with China. And so we, once the news started being heavily focused on COVID-19, our data didn't actually jump that much, because in many ways, because it had already kind of been anticipating an increase in risk in this area. And that was very helpful to our clients. It also helped us design better forecast models in terms of where this was going to go in the future.
All right, Mark, we're just about out of time, but talk with me about the future, the next couple of months, and what your company does in regards to COVID-19 and continuing to monitor the risks associated with it.
Yeah, so for us, it's really about, from a business perspective, it's about meeting the demand for this kind of analysis, but also understanding that that a lot of our clients, they're in the same dire commercial straits as everyone else, and so figuring out a way to deliver value that doesn't rattle folks' concerns around surviving the next quarter or the next year is, for us at least, is kind of key on the agenda for the next couple of months. And I think just constantly refining the models and tracking them against the outcomes that our clients really care about. So, how do our health risk indicators help predict consumer confidence or changes in manufacturing activity? How do they track equity markets and currencies? And that's something that we're building a lot of research around.
All right. Really appreciate it. Mark Rosenberg, thank you so much for your time.
Thank you.